China has too many EVs and it's bringing them to your country. Hey everyone, welcome back to the China EV show. This is Toby. Please make sure to give us a like and a subscribe. It helps the channel a lot. And it's true, China has too many EVs and actually too many cars generally. It is suffering from an overcapacity problem. That is, the capacity of its production is much higher than the demand for its cars within its borders. So how did this happen? I'm not going to get into a whole Chinese automotive history lesson here, but its growth has been massive over the last 20 to 25 years, following China's entry into the World Trade Organization. In more recent years, we have seen the rise of new energy vehicles, including pure electric vehicles, of which China has been a leading example for growth and development. However, several years of disorderly competition within this industry have caused brands to grow uncontrollably, ramping up their production as they try to keep up with the high production and sales targets they set for themselves, speculating for the future high demand of their products and to not disappoint shareholders with conservative figures. So what does this mean? Today in China, vehicle factories currently under construction will have a total capacity of 10.46 million vehicles, with the majority thought to be for new energy vehicles. Many Chinese EV brands have more factories on the way, including opening factories in the likes of Europe. That is massive, especially when you consider the sales for new energy vehicles in China for last year was only just under 7 million vehicles. And here is the essence of the issue. Demand for new energy and ICE vehicles is very high, but not high enough to cover all the capacity of these automotive brands. So what is the solution? Slow down production? What, and rethink our forecasts and have all of our shareholders lose trust in us? I don't think so. Sell the products overseas, of course. In the first quarter of this year, China overtook Japan as the largest exporter of vehicles in the world. These companies are using export as a safety valve to this overcapacity problem. Can't sell them here? Well, ship them somewhere else, of course. However, this doesn't really have any reflection on the popularity of Chinese cars around the world. It simply means that they send more cars overseas. It doesn't mean their cars are popular. The problem is they can export as many products as they like, but if they are unable to market them properly to consumers, then no one's going to want to buy them anyway. Chinese EVs are good, there's no doubt about that. But in many places, still not much is known about them and the brands that make them. To add to this, many countries will reject or make it impossible to sell Chinese products. Maybe the import tariffs are too high to make them able to be sold at a reasonable price. And some places, of course, there are some geopolitical tensions which will push people away from buying Chinese products. Regardless of this, Chinese EV brands are eyeing up potential markets where they believe their products will be irresistible to consumers. One market these brands hope to break is Europe. Of course, this won't be easy. Europe is a powerhouse of automotive brands, and I doubt that they are going to want to give up any of their market share. So how are these brands doing so far? Last year, Chinese brands accounted for less than 10% of the 1.1 million battery-powered EVs sold in Europe. That's not great, is it? But it also raises an important point. It will be the EVs that are key to Chinese brands' global success. The leaders of ICE brands have had years to perfect their products, supply chains, dealer networks and whatever, but it will be EVs that are the great disruptors to the world order of automotive. This hasn't happened quite yet. China is introducing these products to the market, but they are either too unknown or too weird for European consumers to want to try. For example, Great Wall's Aura brand has launched the Aura Funky Cat hatchback in the UK. I've got nothing against this car and it sells well in China, but if you want people to take you seriously, don't have your first product be called a funky cat. In Europe, the top 3 Chinese pure electric models came from Volvo, MG and Polestar, all European brands acquired by Chinese companies, while China's homegrown BEV models accounted for less than 2% of all the EVs sold in Europe. NIO and Xiaopeng, for example, started selling in Europe years ago but have yet to make any real progress. This is also key, bringing together Chinese tech together with European branding, even a well-known name, along with market experience and knowledge of consumers. So I have no doubt we will see more JVs or corporations between Chinese and European, even global brands. Audi and SIAC, Xiaopeng and Volkswagen, it's already happening. And it's not just for the benefit of these European brands. Chinese brands could benefit immensely from the knowledge knowledge that these European brands have, including how to market and resonate with local consumers. We may even see some mergers between Chinese and European brands. Who knows? Let us know what you think in the comments. If Chinese brands can take advantage of this opportunity, the rewards could be massive. It is believed that by 2030, 3 out of every 5 cars sold in Europe will be electric, and a lot of these could be Chinese brands. Those brands that don't establish their global presence quickly are sure to be squeezed out as the battle for strongest EV brand in China continues. What do you think? Would you buy a Chinese EV? Why or why not? Leave your comments below. I've been Toby, and I'll see you next time on the China EV Show.